Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. Now the broad markets, the US broad markets have not been very interesting lately. We haven't had any all-time highs, we haven't had a significant crash, and that is partly the reason why I haven't made too many updates on it, because my convictions aren't so high on any particular direction. I do still favor my long-term, more bearish scenario, which I'm gonna lay out in this video. But the time frame of it hasn't been that clear until some of the developments that I've seen in the past couple of days. So I'm gonna get right into it, but the first thing I want to say before getting into more detail is the fact that we have lower highs coming, but also higher lows. And so this pretty much tells us absolutely nothing about the direction of the market. It tells us that the markets do not have a trend and that the markets do not know where they're going to go next. So that's pretty much our situation in the S&P 500, and I'm sure a lot of people are speculating to the upside, a lot of people are speculating to the downside. So, it's just a matter of time before we find out who's right. So in more detail, I'm going to discuss what's been going on in the past few days. We've had a minor uptrend line here on the daily chart. You can also see that on the hourly chart. And that's pretty much brought us from this uptrend line to this, downtrend line. And so far we've been reversing off of this downtrend line, and we actually broke the minor uptrend line here. And I favor a comeback down to this level at 295 on the S&P 500, just because there is a gap here, and that would be the most probable scenario. Seeing a break of trend line and a gap just below, all the chances are that we come back down to backfill this gap. So that's not really bearish or bullish on its own, but what comes after that is going to be a very important factor into the analysis for the next few weeks. So obviously, if we come back down, gap fill, and then bounce straight up and potentially break out to make some new all-time highs, that would obviously be very bullish, because that would mean that the S&P 500 has no gaps under, no quote-unquote unfinished business, just because of the very nature of gaps that attract prices back down to gap fill the gap. So that's about all I wanted to say on the shorter time frame. And now let's take a look at the huge triangle pattern that we see here, and that's what I'm referring to when I say that we have some lower highs but higher lows, and this is just the markets coiling up the price action and getting ready to spark a big move again to the upside or to the downside. And we'll see if this turns out to be the catalyst to a potential stock market crash here in 2019, like I've been suggesting for a while. I still think that it's probable. I still think that we'll get a 20% move to the downside, and this may be a result of this triangle pattern breaking to the downside. We will only have to wait and see, but to discuss in more detail, I have some new analysis I want to talk about on the weekly chart, and that is what is making me so confident in my bearish scenario. So you can see that this is the weekly chart, and we have the MACD and the RSI here. On the weekly chart, it seems pretty obvious that we are making higher highs, an uptrend, whilst the MACD is starting to wane down, starting to curl down, and that is not a very good news for the bulls. This means that the counter rally is officially over and that we're starting to shift the momentum from an upwards momentum and upwards direction to more a downside. And same thing on the RSI. You can see that each high here on the RSI is lower than the previous one, and that again is not very good news for the bulls. This just shows that the momentum is completely shifting, and that is pretty much what the bears have been waiting for this huge rally that was fueled, very, very powerful rally is only starting to end just now on the weekly chart, and this is the most important time frame when it comes to the general direction of the markets. So that's why this chart is actually pretty clear to me. You know, I like to keep technical analysis as simple as I can, and this chart doesn't get much simpler than this. I see divergence, price divergence on the MACD and the RSI on the weekly chart, indicating to me that the momentum is shifting, and we have a huge triangle pattern developing on the weekly and daily chart that suggests a bigger move is coming. And that bigger move, obviously, for me, would be to the downside. And I've laid out targets here. Obviously, this is a very ambitious target, but this 275 level and 260 level are not very ambitious targets. I think that these are the minimum targets in case we break this triangle pattern impulsively. So that is my take on the recent price action on the S&P 500. I hope you guys found this analysis interesting. If you did, make sure to drop a like and comment to tell me what you think about it. In the meantime, good luck on your trading and see you next time.